The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw another solid day to the upside in soybeans, led by soybean oil on Thursday's trade. Corn, though, ended its run of a couple of days higher with slight losses on the session. Wheat futures under some pressure, a little bit lower in cattle. Hogs higher on Thursday, so kind of a mixed bag overall. Let's talk about things. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing here on Market Talk. Brian, good to talk with you again this week, and kind of a mixed bag overall. I didn't know what to make of Thursday's trade, I guess, Brian.
Yeah, I think a lot of people are kind of scratching their head right now going, did corn drop 3 cents because wheat was down 6 or 7 or 8, or is the rally over? Really nice key reversal on Monday, good follow through Tuesday, Wednesday. So you'd expect maybe there's some increase in farmer selling, some increase in some new speculative money coming in and selling the rally. That's been fruitful for speculators this year. You do have a pretty nice forecast, I think, for northern Illinois in particular, as far as projected rainfall totals. And those farmers there have been hit or miss all summer on rain. So maybe some shore up of dry conditions there. But yeah, kind of a mixed bag across the board. We saw milk prices up again today, so I'm kind of just all over the place. But that's kind of how the markets were today. Cattle beat up pretty hard early in the day, came clawing back. So still reflective of just a high cash market, high price, and sort of that battle between cutouts values losing ground lately, a higher dollar as of late. So a lot to talk about, I guess. So where would you like to start?
Well, let's start. You and I were chatting about the wheat complex off air. Maybe start there, because I kind of felt like wheat was a bit of an anchor on corn on Thursday to some degree. You mentioned that good reversal we had early in the week on corn and maybe ran out of gas. I know there was some talk about President Trump talking to Coca-Cola about getting rid of high fructose corn syrup. That was thrown out there too, why the corn market was down. But I mean, with wheat, it almost feels like wheat is kind of an anchor right now, or at least it could hold corn back potentially from a further rally, Brian.
It's really difficult to argue that corn should rally with a record crop expected. At the same time, wheat prices don't seem to have anything but a negative tone to them. Their rallies have continued to fail. And so you just step back a little bit and go, gosh, when is the idea of harvest pressure going to be behind the market for wheat, or most of the harvest? And when is the market going to find a low, and when is it going to try and recover? And I wouldn't say that it depends which wheat market you're talking about. Now, Chicago wheat posted a really nice reversal back in mid-May, and it's held that so far. Kansas City wheat, looking pretty iffy. Looks like they might have a tough time holding on to their contract lows. Down a nickel today. East Kansas City wheat closing at 540. That's the lowest close of the year, and really scoring a double bottom here. So the buyers need to come in pretty quick. Otherwise, that wheat market has a negative head and shoulders formation on the charts, which those sometimes bear some fruit, and that would point to about another 50 cents lower. So we need to see something come along and pick up these cheap commodities. It's just that it's stagnant right now. The speculative interest is not bailing on their short positions in a big way. They moved out. Commitment of traders report looked like stabilization in corn, or at least the daily numbers probably show funds probably liquidated some here this week, but the markets need a catalyst, and as you head toward harvest, it gets tougher. Now, it is only July 17th. Weather can still be a big factor, but not nearly perceptively as big as we would have talked 30 to 60 days ago.
Well, I think about this. You mentioned the fund positioning and more, and there's been a lot of chatter about this the last week plus of funds, algorithms and more, they're trading this potential big corn crop that is out there in the US, and they're trading these yield models and social media posts and all these different things
Yeah.
that factor in nowadays. And to your point, we need a catalyst here. 420 December corn. I know a lot of folks don't like that price, but it almost feels to me like corn's probably not going to have any reason to move off of that price point until maybe we start having crop tours and boots on the ground and all those sorts of things, Brian.
I agree with all of that. I've always kind of made this argument. This maybe I should copyright this, but I call it the markets move on perception, momentum, and attitude (PMA). And the perception right now is the crop yield based on crop ratings is likely getting bigger. And in fact, we looked at analogous years of crop ratings of 2016, 2018. We looked at what percentage change the crop from July to the final yield number looked like. And you can make the argument that we got about a 4.5% increase in yield coming ahead from the trend line. That's about 189. That's a big number, right? So, okay, you look at that and go, okay, that's a big number. Those analogous years were a while ago. That's 2015 was or 16 was 9 years ago, 9 seasons ago, and 2018 was 7 seasons ago. Cost of production's gone up significantly. So why would farmers sell corn down around $4 or well below the cost of production is the argument. And maybe that this week is what hit the corn market was that we're probably too low too quick. Because when we look at that 189 number, if we throw that out there, Jess, that takes the carry out probably around the 2.3 billion. Well, that's what we were talking about last year at this time. We didn't have the demand we had this year, and last year we were talking about 2.3, 2.4, possibly 2.5 billion bushels of corn, and December corn bottomed at 385. So it just gets really difficult to get bearish beyond $4, even with big numbers. Add to that, the stocks usage number in the world is at a 13-year low. Wow, that's and take China out of the mix, and the exportable countries are low. That's despite big crops. So the big picture bulls can get pretty excited. Short term, though, boy, if you got a good weather forecast, I don't see these algorithm traders turning on the buy signal. I think I think the market's got a challenge ahead of it. In particular, if it rains in Illinois and Indiana, some of these states that have been on the drier side, the drought monitor map will show that those regions have continued to stay pesky dry.
It has been nice to see soybeans the last couple of sessions start to work a bit higher. I know bean oil was the driver Thursday. Tough to find a headline or a reason, but by and large, a solid day to the upside across that soy complex, and getting November beans back to 1025 essentially is a good thing to at least see on that side of the grain complex, Brian.
Yeah, so I saw something this week about there's two things I'd make comment on. Soybean oil's been moving straight up, new contract highs. Well, I shouldn't say straight up, but nice trend up with new highs. It's kind of straight up this week though. Soybean oil new contract highs. So there's a real chatter and excitement about biodiesel, bioenergy, those type of things. Uh, the flip side of that is there's a bunch of meal left over, right? So people are saying, what are we going to do with all this meal? And my response is, well, feed it. It's cheap. Grow the poultry herd, grow the herd that, or whatever herd, all the herds that use meal. So that'll have to come in time. But with cheap product, that's what'll happen. I think for the bean market to really get some run to it, though, you need all cylinders clicking. So this is a three. It's like one of these engines has got three cylinders, beans, bean oil, bean meal. You need all three heading in the same direction. And if you have two, you're missing on one cylinder. For those who can understand that analogy, and when something's missing on one cylinder, you don't have a lot of power. And that's the problem in the bean complex. It doesn't have a lot of power right now because the meal is the anchor, and oil and beans themselves, in particular beans, there isn't enough of a weather concern, let's say yet, to get this market, what I'm going to say, really zooped up, really concerned. And I say yet because it's July 17th. Beans are made in late July and August. We'll see what the weather looks like then.
Brian Doherty, Senior Market Advisor with Total Farm Marketing, is our guest analyst here today on the show. You mentioned the dairy market earlier in your opening comments. What have you been tracking there this week, Brian?
Oh, tracking cheese, of course, and that cheese got dumped up pretty hard again, or drummed, or at least not rallying, right? So it's a really good value to end users. We did see, though, the market make a really nice reversal yesterday on charts and then follow through today, and looking at some pretty solid gains. Nothing dramatic, but 27 higher, 1773 on the August contract here. Still a couple dollars behind where it was, and that's our problem. The dairy industry, I think, has good support near the current price levels. We seem to find good demand, and we seem to think that the marketplace will hold in the 17s and 18s. The question is, can we get back into that 20, 21, 22, or something higher? Not now. Grain's too cheap. One and two, beef prices are too high, and this industry is going to hold together or expand itself for the beef dollars. And I just don't see the dairy industry is commonly known historically for trying to produce its way at a low prices.
What about looking over at this cattle complex? Let's talk about that a little bit. Kind of a quiet day. You mentioned we did work off the lows, so that was at least a good sign. But plenty of volatility this week across the cattle trade, Brian. And sometimes volatility is indicative of tops potentially. I know that's been said many times before in the trade. I mean, what's your thoughts in cattle this week?
I think as long as the cash market holds firm, the board is underpriced and the board is going to continue to try and grind upward. That's been a with hindsight, very simple formula the last several months. And we keep wondering when demand is going to start to falter. And the answer is, I don't know. I don't think anybody knows. You kind of think that high prices cure high prices, but I just wonder if from the demand side, at least domestically, is you've got a lot of people working, unemployment's historically low, and you've got maybe that sector that can afford beef. It hasn't hit a price level that just they're going to say, I can't, I'm not buying this. I don't know about that. Uh, I've said I don't think we develop any new demand channels here. So, so is let's say, people who are running up the credit card debts. They've been in an inflationary environment for recent years. Are they just kind of shrugging their shoulders, going, well, beef's up, everything else is up, put it on the credit card, I'm going to buy it and eat anyways, and who cares? I'll worry about it down the road. That's kind of a mentality amongst consumers, a certain group of consumers. So maybe that's what's driving the market. And so we don't give enough credit to why the market's moving. But when you see producers starting to pass at record high bids, you got to be a little cautious that the market could be near the top too. That could be a train wreck.
Yeah, that's a very, very good point. And something, too, I don't want to discount and not mention the hog complex. Some triple digit gains there Thursday. Maybe there was a little bit of sell cattle, buy hogs at play on Thursday's trade, Brian.
Well, there should be, because there's certainly been buy cattle, sell hogs over the last couple of weeks. So you'd think that just common sense, those spreads would start to reverse themselves. The difference there is that the hog industry can incrementally ramp up fairly quickly compared to the cattle industry. And so that's where I think the long-term view is, look, cattle are in this odd environment where our producers going to hold back calves or heifers. That's a lot of investment to hold back. So the word of caution in the cattle and hogs is when you get these rallies, demand can falter, prices can falter, charts can turn negative. Make sure and defend. What concerns me about cattle producers is we're now into what I'd call a level where they've chased these feeders for a long time, and it seems to work out, right? So it's continue to chase feeders at record high prices. Everybody's scared on that, But I don't know if I'm seeing the defensive posturing that needs to come with that, because at some point, those feeders are going to be a not so good buy and maybe a bad buy. And that's the day of reckoning. I heard a story once. I don't know if it's much of an analogy, but it was a Vietnam veteran, a combat veteran, and he said that there's always a last shot, right? So when they're in battle, there's always a last shot. And I think in the feeder market, there's always going to be a last buy, and then it's over. It just seems that market can't sustain itself either. There's just too much risk to the buyer. And if there's that much risk, they're either going to back away, or you need to really execute really solid risk strategies.
Brian, always enjoy the conversation. Any final thoughts? Anything you would reiterate to producers on the show today?
Well, corn, it's not. It's a market that I think producers, in part, why it's where it is because of it's a good-looking crop. So as I talk to producers, there's certainly troubled areas and spots, but there's a lot of areas that the crop is just really good. So farmers may have an opportunity to sort of yield their way out of some of these poor prices. But historically, the markets don't bottom. Corn rarely bottoms in July. So recognize that there could be more downside ahead, and there's still time to take defensive posturing. This bounce this week may give you the opportunity to do so.
Brian, if folks want to reach out and have a conversation with you there at Total Farm Marketing, I know a few ways to get in touch. How can they reach you?
Well, they can reach or want to reach me with a phone call, 800-334-9779, or an email, Brian with a Y, so it's BRYAN at totalfarmmarketing.com. Or if you just want to check out our resources, good publications, good information on our website, please take a look, totalfarmmarketing.com.
Always good to talk with you. Brian Doherty, Senior Market Advisor, Total Farm Marketing. Thanks so much, Brian. Have a great weekend. We'll talk to you next week.
Jesse, my pleasure. Thank you, sir.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.